Welcome to Connected Conversations in Insurtech. Today's guest is Stuart Winchester, founder and CEO of Marble, and your host, Tolga Tezel, founder and CEO of Canopy Connect.
Hi, I'm Tolga Tezel, founder and CEO of Canopy Connect. Today I'm excited to sit down with Stuart Winchester from Marble Insurance Rewards. Stuart, thank you so much for joining us today. I think your story is amazing, and I'm so glad that we have the opportunity to share it. Now, to kick things off, maybe you can tell us a little bit about what Marble is all about.
Yeah, I'd love to. And Tolga, thank you so much for having me. I mean, this is, this is such one of the sort of unexpected joys of being a founder, being like meeting other founders, is both like having conversations, but like creating content, sort of like talking about our spaces together. It's very, it's fun. It's a fun sort of thing that it's new to this journey of being a founder, at least for me. So yeah, but for myself and Marble, very briefly, Marble is a digital insurance layer or wallet. We're trying to make a layer or operating system kind of happen, but wallet is the sort of most direct way to understand it. Our members, we call them members. It doesn't cost anything, but we call them members, can come in, put all their insurance securely in one wallet, one digital app, any insurance type. They earn rewards for doing that, for being engaged. And what we really do is we build these kind of personal finance style experiences, sort of like a Mint or a Truebill, on top of that data. You know, the 10% of the household budget of Americans is in insurance, and there's no real sort of personal finance style experience for that. It's highly transactional historically. So so we've been live for about a year, and we've been really enjoying working with brands like Canopy to make it happen. And just excited to like kind of talk about what we're doing.
Yeah, I mean, I think it's really cool. I think to the best of my knowledge, you guys were the first to do what you do. How did you come up with the idea?
Yeah, it's always scary to think about it like that, but I think that's true. I mean, there's definitely some people doing similar things, but to really, I think we really went head first into this idea, and that has had its joys, and it's also had its scary moments when you look back and maybe no one else is there with you. But so my background is sort of relevant to this. I ran acquisition and marketing at Better.com, an online mortgage company, and then in that job, I started to see an opportunity for the mortgage business that I worked at, Better, to build an insurance business. So we did that, and I built what's called Better Cover. It still, exists today. It's a national insurance agency selling digital insurance through the Better mortgage flow, and actually Ally Financial's mortgage flow as well. But what struck me when I got licensed as an agent, and what struck me when I would talk to people, like call customers, and this was like 2018, was that there was really no single source of truth for insurance. But meanwhile, when you looked at fintech around 2018, a lot of the neobanks, challenger banks, had started in 2015, so 3 years prior, with their wedge products, right? Chime was famous for their paycheck advance. But by 2018, they had moved into savings, checking, mortgage, credit cards, student loans. They'd really created these hubs. Meanwhile, when I would call a consumer to try to sell them insurance in 2018, their insurance was in filing cabinets, in their drawers, on a million different apps on their phone, best case scenario. And to buy insurance, you had to go to 6 different websites to maybe create the entire insurance stack for your household. Policy Genius for life, Insurify for auto, Young Alfred for home. And there seemed to be this big lag between this sort of kind of hubbing or personal finance experience for insurance that I felt like was a huge opportunity. So I started to talk about that idea. I got the idea of reward was introduced to me by an investor, IA Capital, who we're big fans of here. And that is really the sort of Marble Genesis story. And 2 years and a few months later, we've gone to build that application for American households.
That's awesome. And now you guys are the biggest insurance wallet around, right?
To the best of my knowledge, I mean, I think yesterday I was at an event and someone was like, WeFox is a bigger, it was like, WeFox, I was like, yeah, WeFox is a lot bigger than us. I mean, they're like a unicorn. They're a little bit more transactional focused, but in the US and as a non-carrier, we're an agency, not a carrier. We're certainly the biggest. at least that I'm aware of. And as a founder, you're pretty aware of what's going on. So
Sure. Yeah, totally. And what kinds of numbers are you putting up these days?
So for growth, we're putting up, we're adding a couple $1 million of premium every month, which is very exciting and sometimes a little overwhelming when you step back and you get out of the perspective. So, when we say adding premium, just to sort of break that down, that's dollars of insurance premium that consumers, our members, are coming in and adding and storing in their Marble wallet. So I think by the end of this year, we'll have about $80 million of premium on the platform, which would make us like the 38th largest broker in the US if that was all premium that we were selling, which is not yet, but that's sort of the next leg. We'll be about 50,000 users, I think, by the end of this month. So we're feeling pretty good. Consumer, I've written about this before. Consumer is, you got to be a little bit nutty to do direct to consumer. And I could talk about that ad nauseum, but I won't for now. But it is fun when it works. It's also stressful, but everything's stressful when you're starting a business.
Yeah, sure. That's awesome. And so, every startup has stories about manual processes that work until they don't.
Yeah.
What did you find were some of the things that broke early on?
So for us, it was just myself and my CTO, our CTO Adi, who's tremendous. We built our own we like to, again, build by hand and then automate and then keep automating. So we built this sort of policy ingestion function, very handmade. It was beautifully done by Adi and his team, but it was very handmade. I'm talking about now like 2020. And, 10 policies a day, 15 policies a day, that was totally manageable. This was peak COVID. I would sit in my apartment and just read policies and just write them in. It was easy to do. However, you can see pretty logically when that starts to break down. Weekends, overnight, anything over 50 policies a day. So then we started to automate more. We started to automate the document reading. We actually built our own sort of a little bit more handmade rails into some of the carriers. And then, when we closed our first round of fundraising, that was when we knew it was time that we had to really, start to hit enterprise level growth numbers. And that was when the system really started to reach its natural limits. And when we started the process of saying, hey, you know what? In the last year, there's been some great products that have come to market that do this as their sole technical focus. And we actually kicked off, that's how we connected. We kicked off this sort of process and we ended up connecting with you all, which was I think we got in under the wire before the wheels like totally came off the bus from our own systems. So it was like fortunate timing.
And what were you doing, before that made you feel like something needed to change?
So we were just doing a lot of processing still by hand. We were managing a lot of the configurations in a way that was, I think, slightly more reactive than was productive for a business that we were also trying to handle a consumer front end, consumer engagement. So for us, it was like we had a lot of plates spinning. And that was one plate, and that referring to the rails and the connections into these policy data pipelines, that we just couldn't keep that one spinning at the rate we needed to. And then we also didn't want to look forward at having to add, a plate for life, a plate for commercial insurance. That gets really, insurance is $1 trillion industry. You have to specialize. And even if you specialize, you're talking about $100 billion opportunity because it's such a big place. So for us, we knew that we had to sort of find a partner for this when we were really targeting that, 1,000 policies a month, 3,000 policies a month, 5, that was a level at which the capacity, because the key thing I want to add too is like, as a philosophical from a business standpoint, we don't want to keep adding people. I love our team. I think we have one of the best teams working, but you can't build a sustainable business. And I think we're seeing this in the new market correction that just keeps your fixed costs of people going up and going up. So what we held in our head was we have to have a great experience for our consumers where we can sync their policies in under 15 seconds. And we cannot be building a 100-person ops team and still build a successful business.
Right. And so what was the process that you went about to use Canopy then?
So we sort of, through the doors open, we started to talk to, people. There's some great teams working the space. And then when you and I connected and our teams connected, particularly our CTO Adi again, and you and, the larger team, and we started to kind of get aligned. Well, I mean, before that, what we did is we wanted to understand a couple basic building blocks, like, obviously coverage, obviously roadmap. We're all early companies and we want to make sure we're pulling in the same direction, generally speaking. Obviously tech readiness and integration quality. Working with a partner and handing this off to a partner doesn't work if the tech's not mature enough to actually create velocity. If it's going to slow us down, then that's not a good trade-off for us. And then of course, like brass tacks, like timing of integration and things like that. And, we went through this whole process and we met a lot of great people, but, with Canopy was sort of there was a very natural sense there that, particularly the roadmaps lined up. I think there's this sort of like idea that we were building this orchestration layer for consumers on top of their insurance, and Canopy, in our estimation, wanted to build this sort of like data layer that would most easily enable us to build cool stuff on top of it. And that was ultimately what put us over the top, I think, because it was like, we just want to make sure that 2023, 2024, within reason, we're still executing kind of in the same, cardinal, compass direction.
Yeah. Okay. Well, awesome. And now that you put Canopy in place and had a couple months with it, what's the biggest impact you've seen on the business?
So I guess there's two things. One is that we have been able to scale now to, I don't even know how many policies we did last month, but a lot in a month. And, our ops team, we hired an amazing operations leader, Deborah Gunn, who I've been lucky enough to work with before. And she's put in some great processes, but we've also, we didn't really have to expand the team. We had a really big surge one week, and we asked some of our old interns to come back for a week and help us, just get through some of those, because there's always edge cases. But like, it was pretty remarkable that we almost 10x'd our volume in 1 month, and we got through it. I won't say we didn't break a sweat, but it was a light perspiration. We were really okay. I was still sleeping at night, and what that means in reality is, like, customers were still getting. The vast majority of customers that went through Canopy were getting those 10-second syncs. We were getting all rich data, all policy data, all coverage data pulled in through and placed, correctly. Multiple vehicles. We were getting renters coming in. It was just like this really nice flow. And then, again, because we have edge cases that are not in the Canopy strike zone yet, like life insurance, let's say, we were then able to focus on those and again handle this expanded capacity. And, actually, this is actually great timing. And this is totally just by happenstance, even though we're recording this podcast now. We just did an ops review this morning before this call. And, we do a syncing effort score. We ask consumers how hard it was. And, like, I think this week and last week, and we've still had 90% of users have given us a 5, which is good. That sounds high, but that means low effort. So, like, we are still delivering this, like, really intuitive syncing experience. Which is, again, not to ramble, but like, that's weird because this is a new feature. There's no other thing like us. So the fact that we're getting like a good score is a testament to, I think, the marriage of the technologies as well.
That's awesome. Yeah, I love that. And thank you so much for those kind words, Stuart. We're really excited about what we're building at Canopy, and we're really thrilled to be a part of your journey. We love, part of what we love is growing with, with the customers that we serve. Now, switching gears for a second, let's talk about the industry and what you're seeing.
I would love to. This is my favorite. I can ramble about this all the time. Before I spin on it though, anything that's particularly of interest to you that, because I just spent a whole day at this Insurtech event. So I'm full of ideas and I'm getting ready to go to ITC next week. So
Yeah, I mean, I'd love to hear, what are you sort of seeing as, trends in the industry right now, and what's coming next for Marble?
Yeah, I mean, I think, and we talk about this a lot, outside of this too, Tolga. But like, I think what's interesting to me, and the not canary in the coal mine, that's bad. I don't know, whatever the opposite of a canary in the coal mine is, the good sign is, I saw that State Farm's investment in ADT was very interesting to me in a heartening way, because I think when you look at an investment like that, you are starting to see large legacy insurers move out of their really tight sort of, hey, we don't use telematics. Hey, we're struggling to find creative ways of underwriting. We're not using holistic risk data. We're going to send every consumer through a 40 screen click to quote flow. And in my mind, that was a leading indicator of a really exciting next generation in insurance, which is, I think, from 2016 to 2020, we looked at alternative data, we looked at telematics, we looked at real-time data feeds of risk, and we didn't know how to metabolize that in the industry. We couldn't update underwriting models, or we were trying to, but they weren't profitable, things like that. But I think the industry has started to say, look, you know what? COVID and post-COVID was really tough on the industry. Accident rates are way up. Weather claims, cat claims are way up. Most consumers are going to be staring down, or I don't want to say most, a lot of consumers are going to be staring down 10% plus rate increases next year. And I don't think people have really taken note of that. And I think investments like that investment in ADT and businesses like Marble, I hope, create this sort of connective risk layer where we can get a little bit smarter. We can build smaller, more precise tranches of risk and give people good rates with the right, if they're sort of the right risk behavior profile. Because I mean, the other trend is rates are going to jump. It's going to be tough out there. People who may have been on autopilot for the last 5-6 years are about to see big rate jumps. We actually just did our first, we've now started piping in rate filing data that we pull from all the state regulatory websites. And we've started now alerting users if their carrier has filed for a rate increase. And it's been like, we had a 55% open rate on the emails. It's been this thing that users haven't seen this before, and they're starting to see, hey, Geico just filed for a 13% rate increase in Massachusetts. Oh my gosh.
Yeah.
So that's a long rambling way to say you have this sort of bottoms up trend of rates are going to increase, and you have this top down trend of, I think, the biggest legacy carriers are starting to look at alternative data sources outside of their core underwriting stack. And I think that is going to lead to a very interesting next wave of Insurtech, where data liquidity is going to be very important. How easily can you get new data in and historical data into an underwriting model?
Interesting. And another thing I feel like I'm hearing, we talk with agencies, insurtechs and fintechs every day, and we feel like we're also hearing an increase in interest around building these embeddable wallet and consumer engagement solutions as well.
I agree. I mean, I think for us, when we look at embeddable wallets or engagement features, Marble has a D2C brand, right? We love it. 2019, I spent a lot of, the holiday season, the winter season, looking at old 70s posters to come up with a brand for Marble. It's near and dear to my heart. That being said, these neobanks, these fintechs, they've been great partners to us. But it's about because they're interested in getting access to insurance. Now, the question is, how do they do it? And I've written about this on my blog. Embedded insurance is a tricky proposition because you can slap insurance into anything, but the question is, will anyone buy it? And this was like the sort of my white whale when I was at Better was building the highest converting possible experience. So for us, for Marble, why we think we've been very successful finding top line, highly converting partners is what we say is, look, we are not a transactional first business. We do transact, people can shop through us. But hey, Chime, Current, these are disclosure, these are just examples, not actual clients. We can do more than just put a Shop Now CTA in front of your consumers. We can say, hey, Tolga, you're a Chime customer. Why don't you pull your insurance, just part of your household finances, into your Chime account. We'll contextualize it within your entire financial picture. And Chime will give you access to that data as well if you want to monetize it down the line by, in fact, building a shopping experience on top of it. And that is something that maybe to a fintech person who doesn't know Insurtech, that might sound like something that maybe is very straightforward or should be straightforward. And in banking, due to Stripe and Plaid, maybe it has been straightforward. But that's something that I think, and I don't know if you'd agree with this even, but like Marble and Canopy together kind of deliver that fully functional consumer integrated experience where not only is the data coming across in under 10 seconds and clean from Canopy, it's being delivered and contextualized, usually via an SDK, in an existing financial app, so a consumer can actually look at it and make sense of it. And I think it's going to be very powerful. I actually think I think 2023 is going to be very big for these integrations.
Yeah, I think so too. I mean, certainly the trends that we're seeing in consumer reports are that year over year, more and more consumers are not only wanting this but demanding this.
Yeah. I mean, in some ways, think about it. Why would you not? I have a Chase account. I have an Ally account too. I'm a big fan of Ally, and I have credit reports and my points and my checking account and my credit cards and my debit cards and my investment account all tied in there. And then before Marble and Canopy worked together, if I wanted to check my insurance, I'd have to go to one app, and then I'd have to open the filing cabinet. Now at least I can tab over to Marble and be like, okay, do I have enough life insurance? Or what payment is due next? Or hey, did my Geico rate just skyrocket?
Yeah.
And for the next leg, while we're always going to have that consumer experience, I really do think that the banks that will win will be the ones that also say, you know what, don't even tab over to Marble. Just open up, the Capital One insurance window. That's that Marble Canopy SDK or whoever, but I hope it's us, and look at it all in the same picture. And I mean, that's the super app,
right?
That we've all been chasing.
Right. Exactly. Awesome. Well, Stuart, where can people find out more about Marble?
Yes. MarblePay.com. It's a great website. I bought the domain a long time ago. It may change, but don't worry. MarblePay will always work. It looks very 70s. We did that on purpose. My favorite color is orange. You can follow us on Twitter. We just tweet articles and useful stuff like that. And which is, I think we're at Join Marble. And then, I would just say those are the best places. And then also, I do want to shout out as well that we have a really active ambassador community too. So if people listening to this, want to check out Marble, but also want to get involved with making suggestions and giving us feedback, we do run a private ambassador sort of Trello board where users can give us feedback, and I get in there and kind of talk about stuff with people. So, if you do sign up, also check that out, because we're always looking to add. We do sort of quarterly invitations to very active users to join our ambassador program.
Take notes, other consumer apps. That's a great way to get a design input and improve your.
It's awesome. It has been. We're actually about to launch a feature next week that is 100% inspired by and in response to some of our more active ambassadors.
Yeah, features like that feel the best. When maybe you didn't think of it until you heard a bunch of users complain, and you're finally able to.
No, man! Being able to hop back in that board and be like, "Yes, open the app up, check what we just built," is like an amazing feeling.
Yeah, exactly. Well, awesome, Stuart. Do you have any parting words for our listeners?
I guess. I mean, what I would say is, I'm a sort of. I think Insurtech is going to enter a very interesting stage, and I think that stage is going to look like it's going to start to look different than fintech. Is what I guess what I think. Where it's like, or if you think about the timelines, and I think the next leg of Insurtech is going to be the carriers, the legacy carriers, really digging in and playing ball with not every insurtech startup, but a good amount of them. And my hope is that, people listening to this who are probably in the insurance space kind of feel that way, or if they don't feel that way yet, are open to it, because while there has been sort of an insurtech versus incumbent dynamic in past generations of insurtech, we're going to go into a very interesting place in 2023. And I think both in terms of the fundraising available to startups and the realities of the market to the incumbents. And I do think the best way you get out of 2023 with a high consumer sentiment and successful businesses is by actually like those, the two sides of the insurance market, the startups and the incumbents working together. And I mean truly working together, not just slapping logos on websites. So that's my hope to anyone listening to this, is that that's something that we'll see more of next year.
Awesome. Well, Stuart, thank you so much for sitting down with me and telling us about Marble. And thanks everyone for listening, and we'll see you on the next one.
Thank you, Tolga.